Hey guys, Mark with Think Insurance, and today I'm going to explain why I do not recommend that you invest in Lemonade, nor do I really love the fact or recommend that you should even join them as an insurance company. We're going to go through that right now. So many of you requested this video about a year ago. I had done a review on Lemonade Insurance, dug into their employees, dug into them, and I really looked at it as far as should I put my money as far as an insurance. And it turned out a lot of investors had questions, a lot of people had questions on that. So this is kind of a recap of the follow-up of that. Now I did do a positive version. This is completely the reasons I do not like them and flat out am unhappy with a lot of the stuff they do. I'm going to put that link to that video, so if you kind of want to see the reasons you should join them, that's also going to be there as well. In the meantime, let's dive right in. Now as far as a customer, the reviews have gone way up. They've gotten a lot better. They're almost 4.5 to 5 stars, where previously they were in that 3-star range and not doing so well. If you dig in deep enough, you'll notice that there are a lot of claims issues, and a lot of that was fixed because they actually had done claims outsourced, and they were working at the time, a year ago, they were working on moving it in-source. And so internal. So now that they've got that fixed, I believe the reviews part of that is getting better. The AI bot is getting better. That being said, as far as an insurance company, I actually don't hate them. There's a couple things that I would recommend that they change, and it's going to be in that video at the very end. Don't even have to watch the whole thing. If you skip right to the end, I've actually time-stamped it. It'll show me do the app, the quote on the app, and then right after that, it's going to show my conclusion, where they recommended all the wrong coverages, so they're just throwing cheap prices at you. Even though mine was actually 3 times the price that I currently pay for home insurance, they lowered all my coverages, gave me high deductibles. So as a customer aspect, I highly recommend that you get advice, or if you know what you're doing, great, join them. They've got really good claims that I've seen lately. But apart from that, you got to know what you're doing with their app. Otherwise, don't even touch it. Stay away. It's not going to be beneficial. One of the videos that I came across was why ARK Invest is wrong about Lemonade Insurance stock. And one of the things that I've noticed, they're growing rapidly. Previously in the second quarter of 2018, they showed that they only had about 168,000, which is a lot of customers, but they've grown in quarter 2 of 2019. So a year later, they've over quadrupled or close to quadrupled to 443,000, and they've done it again quarter 2 of 2020. They're now 814,000 customers. So they're rapidly growing, and that's getting a lot of attention. And so people naturally think, oh, I gotta invest. There's a lot of good customers. The problem with that is their premium per customer, although they is getting better, they've increased their premiums, isn't quite there yet. They basically have gone up about $40 to $50 per customer over time. The problem is they've paid out way more claims than that. They talk about the loss ratio, how it went from 87% loss ratio, which is like you should have shut your doors at that point. I get it. They're new. They're only 4 years old, so that's another negative, but they've grown a lot. Their loss ratio is massive. They've gone from 87%. They've gotten better year over year. So from 87 in quarter 1 to quarter 2 of 2019 to 82 to 78 to 73 to 70 to 67. But notice how it's slowing down. They're actually having a loss ratio that is going down. Great. But if you're above 1.1 or 1.2, you're losing a lot of money. And the response to it is, yes, our AI is getting better, we're collecting more data, but they're also gaining a lot more customers. Apart from that, they also have noticed that in this portion of the video, they've lowered their marketing budget, which is actually a negative. They are well known. They've blown up over the internet. They're on YouTube, they're on the TV, they're all over the place promoting the cheaper, better deal. They're really focused on the younger crowd, so the 30 to 35-year-olds who have never had insurance. So that's really their goal. They expect them to go from never having insurance, joining Lemonade, getting good deals, maybe a couple claims, and the claims is where they gain the customer loyalty. And then they grow from there, and they think they're going to buy houses and they're going to grow. And so 2025, this whole thing's going to blow up, right? So here's the problem. You have the customer growth going way up. So every customer that these guys take in, they're losing more and more money because their claims are so fast, they're good. They're actually doing well as far as a customer goes. They're claiming that they've got the fastest claim in the world, which is not a good claim, unless you're the customer. They're claiming that 30% of all their claims are handled within 3 minutes. They're paid out and done. Great, love it. Good AI. They're claiming that they're working on the fraud and getting it better. That's why their loss ratio is so high. Hey guys, if you're getting good value out of this, I know this is kind of a negative video, but I wanted to kind of chime in, and I don't have advertisers. I do have a lot of viewers, but I wanted to chime in and just ask you some help. I've got a friend that is actually going through brain cancer, and if you get any value out of this video, if you think that you want to donate or give to me, great, subscribe, that's awesome. But at the end of the day, I'm going to put a link below to her GoFundMe. Her family needs all the support they can get. Amazing, amazing people. That would mean the world to me. I appreciate you guys watching this video. So what you do is you kind of video yourself and you say, okay, I have a claim this and I've claimed that and I'm doing this when you file a claim. That's going to prevent that. They also think that the fact that they're donating to other companies and donating to causes, you're not taking money away from them because they're not making that extra commission. They're getting paid their salary no matter what. So now you're taking the money away from the causes. That doesn't stop fraud, in my opinion. I don't think that's enough to do it. Personally, I'd rather pocket the money, and that may stop my fraud a little bit. But as far as that goes, it's not going to stop it. So they're growing at a rapid rate, and their claims loss ratio is slowly going down because their AI is getting smarter. Well, think about this. They've quadrupled in the last 4 years. So they're almost 7.5 times, right? So they've gone almost 7.5 times bigger in the last 4 years. Imagine how many claims, even if they cut their loss ratio in half and they went from 67% down to, let's just say 30%. We're going to just make it great. They're only losing 30%. If they double their revenue again and double their customer base, 30% is way more than anyone can handle. So they are putting themselves in potential risk by gaining too many customers. The other part is they're also focused on some of the things that I don't believe they should be. They started with renters, they grew into home, but the thing is now they're going into pet insurance, and that scares me. I've been around the block. I've seen a lot of companies add products, and more often than not, those additional products were too quick. It means they're trying to add money to the books and they're trying to overcome some hurdles because they're losing too much money. And they're like, oh, well, let's just add another product that'll explode the sales and then we'll grow more. If we're lucky, fingers crossed, arms crossed, eyes crossed, right? If we're lucky, then that'll kick us out of the hole and then we'll grow. We'll have enough investors. Things will hit. We'll start making profits. Everything's going to be great and shiny. So Lemonade, I appreciate what you're doing. You've got a great concept. You've got a lot of customers. You've put a lot of money into advertising. You're backed by some really big people, but you really got to fix your loss ratio. If you can't fix that drastically, you need to slow down taking customers. Probably why you're lowering your marketing budget, but it's going too fast. I think you're going to grow too quickly. You're going to lose too much money. And you've created a really, really good algorithm. So if you can combine the technology, here's what might actually pull them out of the hole. If they combine the AI, sell it to a State Farm or an Allstate or one of those guys, they could probably make all their money back. That's where I think they're going to have the advance, is they're going to take that technology and apply it to a company that has all the data for home, auto, which you don't have, which you probably never will have. I don't think that's ever going to be a thing unless 20 years from now you've somehow made a lot of money. And then you're going to apply that pet insurance to all these companies. You can sell that data to them. There is a little bit of profit there that you could create. But at the end of the day, as far as customers go, love that you're taking care of them, love that you're donating, but you're losing way too much money to come out of that hole. You're growing too fast, too high of a loss ratio. I don't think it's going to work. At what point does your reinsurance, the Lloyd's of London, say, we're done, we can't do this anymore, we're not insuring you to that level? And once they cut the chains out, you're not going to find another company that's going to reinsure them. Because what Lemonade's doing is they're insuring their losses, and they're basically taking those losses in and paying them out with other people's money. So they're basically reinsuring themselves in case something happens. Let's get into some of the facts. Here's a couple things that I wrote down when I was watching. I watched about 10 different videos. I did my own research, went through their website, through their claims, through the reviews. I also went through their data as far as like their terms of use and all of that. So I'm not an expert. I'm just a guy on the internet throwing my opinion out there. Invest where you invest. Choose to insure with who you insure. This is where I'm coming from. 70% of all the customers are under the age of 35. Great, that's a young demographic. They're not really new. They don't really know insurance, so maybe there's not a bad rap with them, but they don't have a lot of money. There's a lot of risk there. 90% claim they'll never switch. I don't believe that. Look at the divorce rate, right? You get married, I'll be with this person for the rest of my life. Not even 90% can hold there. So it's not going to be true with insurance. I would bet you it's close to 30%, 40% if you're lucky that will actually stay with you. That's great though. That's actually even really good. So you've got a model that has beaten a lot of companies. So 93% of all of the insurance in today's age is sold offline. So you're on the phone with somebody, only a small percentage, and I think that's actually a little bit wrong. I would say close to 80 to 90% is offline. A lot of people are going online. They're searching for that type of lemonade. Progressive is actually stepping up and doing something similar. They're allowing you to buy online only, so you don't need an agent directly to go with. You better know what you're doing though. If that's the case, you gotta wonder just a little bit. There's these massive companies called InsurTech. They work with all of the technology, the drones, the AIs, all of that stuff, and they kind of report all of that. They've been watching Lemonade, they've been watching Root Insurance, they've been watching all of these tech companies come and go, and what they're doing is they're keeping an eye on it. They also have their own version of them, but there's a reason that the big companies aren't adopting this yet. They know that this isn't the route to go yet because of that loss ratio. They're really keeping an eye. Because do you think that State Farm, the largest in the nation, which doesn't even have, I don't even think they have 10% of the market, do you think that they couldn't just create their own AI and pay $10 million to a company to do it? They probably have already started it. I'll bet you they even have the algorithm sitting there, but they haven't turned it on and they haven't started using it because I don't think they need it right now. There's a lot of trust in agents. There's a lot of trust in customers. And so I don't think that creating I get a salary no matter what you do is going to create that I'm not going to start fraud, because I think what's happening is I think a lot of the fraud from the other companies are jumping onto Lemonade because they know you'll pay those claims. And so they're going to jump in there, expand their claims, or they're young and they don't know. Maybe I'm wrong. And maybe it's great people and they're not going for fraud, but they're not going to know what to do. And when the time comes, I think they're going to have higher claims than normal. So to wrap this up, I personally wouldn't invest in Lemonade. I would consider them if their prices would go down in my area, or at least for me, as far as like home insurance, but I don't want to lose my multi-policy discount, right? I'm getting way more coverage with my current insurance. I'm getting that multi-policy discount, and I'm a quarter of the price or a third of the price that Lemonade has to offer. So for me, it's a bad choice. Investment, all the things that I mentioned are some of the major things that I'm scared of. The biggest thing is the growth and loss ratio. I don't think that there's a good turnaround at any point, even though they say in 2025, based on their progression, that they may be profitable. Keep in mind that progression with the loss ratio is slowly going down. It's losing its power. They cut it in half, they cut a little bit, they cut a little bit, they cut a little bit. In the meantime, that growth with customers is skyrocketing. So if they keep growing like that, even though they trim away that loss, I don't think it's enough to overcome that portion of it. I hope you guys do last. If you do and you get through that piece, if you can overcome that hurdle, that's where that you're throwing your money into that high risk pool, in my opinion. If they can overcome that, then it's night and day. That's where you invested in Apple on day one, you've invested in Lemonade. So you've got a really good shot. It's a high risk. I wouldn't put all of my money there. As far as a customer goes, definitely watch that video. Anyways, this is Mark with Think Insurance. I appreciate your time. Like, subscribe, all that stuff. Thumbs down if you didn't like it. Go ahead and roast me. This is what this video is for. This was my negative against Lemonade. I did a positive, so you've got both sides. I hope you guys enjoy it. I will see you in the next one.